the nice thing, every one of these panels are almost better than the last. The people to my left are some of the best practitioners of sports investment that you're ever going to hear or listen to. And we're going to cover off a lot of items, but without further ado, I'm going from this side to that side. Dan Adams, Head of Sport and Entertainment at Poisonelli, and William Mao, Senior Vice President of Global Media Consulting in Octagon, Betsy Morgan, Board member at Together. I think your content director was speaking earlier, if I'm correct.
Right.
Yeah. And Stephen Schifrin, Head of Sport and Entertainment Investing at Terrapin Partners, located in nearby my house in Coral Gables. So if you don't mind, I think you'll explain what you do for a few more minutes, because that's what they want to hear. I'm like a referee. I need to be behind the scenes. Unless it's SEC football, then I need to be right in front,
Absolutely. Dan Adams at Polsinelli, based out of the Boston office. We have about 25 offices nationwide, but run the sports and entertainment group there. A lot of my practice is M&A. Clients include private equity, and we'll get into some of that, but ranges from individual investors in sports properties, family offices, venture capital investing, but a lot of private equity clients. And I also do, I know this is the panel on investing, but I also do media rights, venue leasing, and other sports-related work as well.
Good afternoon, William Mao from Octagon. I work out of our New York office here. Octagon, one of the OG sports agencies in our industry. I would like to say we are the startup of the OG sports agency in terms of our media rights group. On a very basic level, we advise on any broadcast and media related transactions, both here in the US as well as internationally. About 50% of our business is actually offshore in terms of the brokering of these types of deals. And as media and media rights become a greater share of the revenue that's generated by the sports industry, more and more folks are coming into the forefront of trying to figure out how to use it as an investment vehicle for return. So that could be anybody from leagues and broadcasters, as well as the private capital community that is looking at sports in general as a vehicle for growth, driven largely by media rights.
Good afternoon, I'm Betsy. Chris said I'm a board member at Together, and our chief content officer was moderating a panel earlier this morning. Together is a women's sports culture content community that was started just before the pandemic. My background is not at all in sports. It's in media. I worked in traditional media for a decade. I built a bunch of digital native media businesses in the news and information space. And we started Together because we didn't think that there was a business focused on women's sports and the athletes behind those women's sports back in 2018 before the pandemic. Turns out women's sports is a thing and a growing thing and a fantastic investable asset in all aspects. So much so that myself and my business partner have started a new fund focused on investing in women's sports globally, and very interested in 4 sports in particular: American basketball, soccer, football, golf, and tennis.
Hey everybody, my name is Stephen Schifrin. I'm general counsel and head of the sports investing and advisory group at Terrapin Partners. We're a boutique private equity, venture capital, equity capital markets advisory principal investor group based in Miami. We do a lot of different things under the umbrella of a family office, which is why we do a lot of different things. And most of our sports, been doing it since 2012, and spent a lot of time in Europe, a lot of time in soccer, football, a lot of time in motorsport, and looking forward to the conversation.
And this is why this is fun. When Dr. Rosser says put the panels together through the years, I like to put people in the room that are actually getting the things done, but also, if you're taking apart the deal, why are they here? Dan and I, through his colleagues, have worked together. I have not had the privilege of working with Betsy's group. Will and I have worked together. Steve and I just finished a Formula One project 2 years ago, and a buy-side sell on another major motorsports. Every single person here is putting something to the table, and no 2 deals are alike. So with that in mind, and navigating the current landscape, and God knows the current landscape changes. If you say AI, it's suddenly worth more. If you say protein, everybody buys it. Let me ask you, and I'll come to you, Dan. You've been around a couple transactions. I know you're doing an MLB one right now, kind of winking and on. What's the difference of this as you're looking at these structures? Because the minority interests now are increasing in value, and they have privilege, right? And they're asking for different things. It's not just, wealthy family office any longer. There are lots of people that aren't from these cities buying in because it's a limited inventory. The scarcity matters, but they have to have proper deal making too. What are you seeing now that you didn't see maybe a year ago or 2 years ago in the midst of this?
Well, I think the access that private equity was permitted just in recent years, to me, opened up actually access to lots of different avenues. We now mentioned family office 3 times, so there's folks like that are investing, and I'm thinking right now, just because I'm working on 2 MLB deals, they don't want me to mention either one of those, so I can't mention that, but the types of investors, right? And so with private equity, I think it's opened the access for everybody, individuals that are really ultra high net worth individuals, family offices. You're seeing venture capital, different kind of fund groups because of that private equity. In terms of the structuring too, it's they think about it a little bit differently than what you might think as the majority owner of past years. When you think about Jerry Jones, almost kind of the face. They do want they want to be involved, add as much value as possible, but think about it as an investment. And I guess that's this panel also that think about it in that way. So due diligence, and that's created some tension. Clients that want to do due diligence, and in the past, people would just buy it because it's the team that their favorite team. So that, in terms of a deeper dive and those sorts of things, in terms of negotiation, I think is critical.
Okay, so, and the way we're going to do this, because I'm going to go to Betsy and then Steve, because then underlying all of this, right, at the end of the day is an assessment by Will, who has a responsibility to say it's going to go like this, it's going to go like that, and that's the underpinning, if you will, the underlying asset that backs almost all of these transactions at some level. So Betsy, you mentioned the 4 sports on the female orientation structure, right? There's a reason, right? It's not just, well, everybody's paying more attention to it. And you and I talked offline about the measurement element that I've always had about the metric needs to be other women's sports, not, well, the men did this. Because the men in 1980 were having a basketball game that was tape delayed. Are we going to go that far back? Because if we do, women's sports isn't exploding. It's already exploded. It's about how do you carve out the future growth.
I think there's a lot of folks that say, hey, women's sports, it's all kind of up and to the right. And certainly if you look at, from a team valuation standpoint, if you're looking at the NWSL or the WNBA on the team side, those sports team franchises have appreciated significantly in the last year, 2 years, 5 years. From expansion fee prices on the NWSL from $2 million to $150 million. The numbers are equally as crazy and high on the WNBA. The path to the future of women's sports from a ticket standpoint, from a media rights standpoint, from a commercial standpoint, it's going to be like everything else. It's going to be lumpy. It's going to have ups, it's going to have downs, it's going to have good seasons and less good seasons. And I do think in the space there is so much opportunity for investment. There's so much opportunity for operationally led investment, and that's what our group is doing because of that lumpiness. This is not a sort of NFL minority ownership where you put your money in and you kind of know that it's going to grow at a nice rate over the next 5 to 10 years. On the women's sports side, it's going to grow, it's going to shrink. We'll sell tickets, we'll sell less tickets, good seasons and bad seasons. And from an investment standpoint, that's why, Chris, to your point, we are focused on the 4 sports globally that have the most heat, that have the most fan base, that are the biggest to start. I think you make those sports more profitable, more steady, and then you can go on to put money into women's hockey, is my opinion.
That's a great point, actually, and we'll get to those sports. So I've had the privilege of working with Stephen for a few years. There's discipline, then there's discipline with a capital D. Stephen and his firm are arguably, I think, one of the most disciplined providers of wealth, economic opportunities, funding. I don't want to go on, but walk through structures, because a lot of times you're behind the scenes to give it to a team owner or to someone to say, this is how we think this should look, and some of the key underpinnings.
I would say that the way we look at the sports environment is, I mean, you lots of different structures, right? You've got a whole universe of people. You've got the people that have been in the sport, whatever sport you're looking at, since for 20, 30 years, and you have people that are newly in it. I mean, you look at in Europe, for example, you're doing deals, you're walking into communities. I mean, all sports is local, right? All politics is local, all sports is politics. You're walking into a community, you're interacting with a seller who fell into their ownership position because they were the one left holding the bag when it was a community association. It was a nonprofit. They weren't making any money, they weren't trying to make any money. They were passing the hat every year, and then someone stepped up and said, I'm going to do this as my full-time job, and then they became kind of the de facto owner, and then they put a little money in, and then all of a sudden the world started to change around them, and they found themselves investing more, recruiting investors, building something out, but they weren't in it to make money. They were in it to preserve their legacy, and they were in it to build their community. And having an interaction with someone like that has an organization that is essentially a family business with a whole universe of equityless shareholders, effectively, people who feel like they own a piece of the team, whether or not they get dividend checks. They're a constituency, much like a political one. And so balancing those interests, and we can talk more about this later, I think, but the central role of fans in driving performance of sports teams cannot be overstated, but it also plays a role in how you structure deals, how you build relationships, how you build community around your transaction. And I think that is probably the most fundamental thing that we've learned over the last decade and a half, which is the structure of the deal is driven by, in many respects, the community that you are walking into and the work you have to do to make a bespoke custom deal, like you would buying a flower company from a family in the Netherlands that's been owning it for 150 years. You have different stakeholders with different interests, lots of different moving parts. This guy has put debt on the company, and he has a special deal. If his financial investors get out, get a certain return, then he has a veto on it. I mean, the structures that are in place when you walk in are not going to be what you see walking into the NFL, for example, where you have a much more corporate environment. Everything is established and regulated and in a single entity model at that level of maturity. And I've spent a lot of my time in European football, in European academies, in African and South American academies, and again, in the football, soccer space, and also in motorsport. And you really see that contrast between the single entity model and everything else in that, and that drives how you structure. And the answer to the question is flexibility, creativity, and openness to whatever it is you're finding when you see the opportunity that you can leverage to make money.
So, the downside of the problem versus the upside of the solution, ultimately, in a lot of ways. So I'm going to go to you, Will. Look, there are very few experts, and I don't throw that out there. But if you're going to go write a big check, and you're going to need to know, is everybody with me? People watching, people paying to watch, if you will, behind the firewall. I'm calling Will. I need Will. Are they there? Because the underpinning of all of these things we're buying at some point is somebody's eyeballs for a period of time that is meaningfully more important than anything else that might go on in their day. So much so that it's appointment, streaming, television, whatever it may be. So Will, you're the person on the hot seat because they're all buying something and they're baking into their analysis what you're telling them. How's that working out?
Yeah, so just kind of tie it to some of the talking points that you have all shared already. I said earlier that media rights, if it is not already the number one, it is the 1A, 1B in terms of the revenue coming into an organization, whether that be at the league level or trickling down into individual franchises and teams. And so from an investment perspective, what we're seeing is a function of what Chris talked about, which is the constantly evolving, changing landscape. The ground continues to move below us as we're trying to make decisions. And so what it has done from an investment and a transaction perspective is it's increased the frequency and the volume of investment-related decisions as it relates to your media rights. So let me try to break that down into a couple of component parts for you. One, we'll speak is specifically in terms of the length of deals. Because the world is more and more uncertain in terms of your visibility over the horizon, in terms of who are going to be the major platforms that are here today and still here tomorrow, deals are shorter. So gone are the days of 10, 15-year media rights deals. You're looking more at single digit, even 5, 3, 1 year with 1 year option type of deals. So that increases the frequency in which deals happen from a year-to-year basis. Then two other dynamics are at play. One, because these rights are becoming more and more expensive, and because the expectation of media rights, which is driven by the valuations on franchises and expansion, is increasing, just like in any other space, there are way more millionaires and hundreds of millionaires than there are billionaires. There are more $1 million and $100 million funds than there are billion-dollar funds. So the universe of people that can invest at a certain scale diminishes as the asset increases in price. So what does that mean from a media rights perspective? That means more players per deal. And I think you're seeing this as a consumer in the marketplace. We'll use the NFL as an example. It used to be, I'll put aside the Sunday ticket package, it used to be Fox, CBS, NBC for Sunday night, ESPN for Monday night. They still have those 4 partners, but now, Jay was just here. Amazon's a partner now for Thursday and Black Friday. YouTube did the Brazil kickoff game. Am I missing? So Netflix is doing Christmas, right? And so you went from 4 to 7. And if you think about any sport you're a fan of and thinking about how many access points you need to have to consume everything these days, that's increasing. So per deal, there's more deals to be had per cycle. And then the last piece is the shrinking of the world. And what I mean by that is you used to maybe just throw in your international rights to your domestic broadcaster because you weren't going to find many parties out in the marketplace that would make it worth the squeeze to squeeze that water out of the stone on the international side. But that's no longer the case, right? Because the world's getting smaller, there's digital access to things that make the cost of delivering content lower than it was ever before. International is becoming this additional dimension of space for transactions. So within each deal, not only is your domestic space getting more fragmented, you're also going to go try to solve parts of the world internationally on an opportunistic basis, whereas historically you may have just done one deal for your international rights. And so that all underpins kind of the growing valuation of a lot of things in our space.
Okay, so if you're reading through the lines, and this is a factoid, there are 19,000 private equity companies registered in the US. There are more private equity companies than there are McDonald's. So those folks that Will saying 100 millionaires and millionaires are pulling dollars, and that has led to what assets are out there. And a lot of them still come down to, I may never own the Green Bay Packers, but I might want to own the Green Bay USHL Hockey Club, because that's in my town too, and it's really interesting, and they have this interesting strategy. But if I roll up 20 of these, it's even more interesting, because then I have something of value. To Stephen's point, it might be amateur to professional pathway hockey for men and women. I'm going to stay with you, Will, for a second, because you talked about the windowing, if you will, the shorter media cycle, because that's having a direct impact, right? And I said it last night in our offsite, and I know there's folks from all the leagues here. You wonder why leagues go out and open up early? Because when you look at these things from the way we have to look at it, the NFL makes $3 per viewer. That's a pretty good deal. NASCAR makes 11. Oh, no, wait a minute. That don't look so good, right? We need to open up. But you also have to now know that the people opening up to are some of the biggest tech firms in the world that may not actually need it, but want it. And there's a difference in the way you negotiate that.
Yeah, so 2 points there, and please others chime in from your perspective as well, which is one, if you are a property in the marketplace and you see someone you view as a contemporary, a peer from a relevance perspective, similar sport, maybe it's a different, if you're in the college space, another conference, and you see them get something like a 2x increase in their deal, or a 2.5x increase in their deal, you might be like, okay, it's time for me to reset my price. There's an opportunity, there's a reference point, I'm justified in having that conversation. The NFL, there's a lot of talk about them opening up their deals sooner than the actual expiry, because they see, for example, the NBA and the deal that they just got across new partners, and they're like, well, maybe I want another bite of the apple sooner rather than later. So that's one piece. But to your point, Chris, we often look at 2021, the first half of 2021 compared to now, as a reference point. So if you look back then at, for example, something like the stock price of the traditional 4 or 5 major networks in our market, I'm talking about the likes of a Paramount, a Comcast, a Fox Corp, and a Disney, you look at their stock price in H1 2021 compared to now, most of them, I think maybe save for Fox, is generally down, right? If you look at it from a comparison perspective. At the same time, the big tech companies, and I'll include Netflix in that as well from a content perspective, their stock prices have appreciated triple digits in some cases. And so who has the resources to invest in any content, let alone sports, is more so on these new tech platforms side. However, and the key however is, and I'll use an analogy here, sports rights to ESPN or Fox Sports or CBS Sports Network, that's like water and oxygen. You need it to survive. You need a program 24 hours a day, 7 days a week, 365 days a year. If you are a network, or whether it's traditional or on the tech side, where sports is one part of your portfolio of content, it's a nice to have. It's champagne, it's fine wine, it's an aged whiskey. And it has value, and it can drive a unique proposition for you, but you don't need it in the same way. You can make an ROI with that dollar in so many more different ways comparatively to a network whose bread and butter is content.
And the reason, Betsy, I want you to go here because I was going to lead this to you, right? And here's why. I talked offline about a conference a week and a half ago in London, and one of the best pieces of research coming out of that was when they pulled out the EPL women's program and what it could look like if it was a standalone program, and the new from new business and the new from new opportunities. But one of the most interesting parts was how are we measuring it? But the fact from a timing perspective, to Will's element, the world's changing and how I view it is happening so fast. But within women's sports, it's already been there for so much longer that they've come to the phone, or they've come to the laptop, or they've figured it out in their lifestyle. So that's an advantage of timing that I'm not sure is always baked in yet in the women's sports when I look at the evaluations.
Chris, I think you're exactly right. What's so fascinating is Will talked about it from a deal standpoint, from the folks sort of buying those media rights. If you look at the other side of the spectrum, this applies to both men and women. From a fan standpoint, how does the fan find their favorite team? In a world where the regional sports networks have collapsed, if you're looking, how do you find your team? How do you find your games? On the women's side, what's fascinating, and the NWSL is a great example of this, when they renegotiated their media rights deal 2 years ago, they are on, the total number is a very sizable increase over their previous deal, but they are on 6 or 7 different platforms. And then there is now a whole ecosystem, including our team at Together, that puts out on a almost daily basis, here's where you watch women's sports tonight, here's where you watch your team tonight. You have to, from a team standpoint, to talk to your fans about where the game is. It might be on ION one night, it might be on ESPN another night, it might be on CBS a third night, and how you have to navigate through paywalls and not paywalls to watch your favorite players pay. Chris, what's fascinating is, as you've seen European, we'll use football, soccer as an example, begin to be more and more interested by fans in the US, how you then deal with that time change, right? And how on the EPL and the EFL, on the women's side, it's the WSL and WSL2, how those games that are broadcast on the BBC or Sky, how they come over to the US and when they're on and when you can watch them. So we are living in a global world where you can basically watch sports, some sports, any time of day.
You can't sit in the Roone Arledge Auditorium where he taught everybody the lesson of a great narrative is how people come to the game. So for me as a father of four, my daughters know more footballers in Europe because they're on Instagram, they're on TikTok, talking about things that have no interest to their game, but interest to them. And I'm like, wow, they're connecting 24/7. And I know a couple years ago we had the Netflix folks here. The day it went out, there were 23 million viewers of that episode. The metrics were unbelievable. And I said, you know what? That's it. These footballers have a better evaluation, and the teams aren't yet baked in that number. But at some point, it will be. So you're catching it not just at the right time, you're catching the medium even better. Because it's not going to be such a big strain. It's like, well, where do I find the football game? The NFL football game. It's on this one, that one, now. It's an education element. Not so much in women's sports. I know exactly where to find it all of the time because it's conditioned.
And fans follow players. They follow players first. They follow teams next, and whatever channel or outlet is broadcasting, that game is sort of the last thing to figure out.
And exposure important though, because there's still growth opportunity there in women's sports where, that's important. So the access where it's several different options, that has to be important.
Well, that's a good question. I would love to get your guys' perspective as you're looking and helping to structure investments in franchises or leagues in general. There's the pure economics, the cash that as part of a media deal, a sponsorship deal or otherwise, but you brought up exposure. And I'm just curious how you guys think about exposure, because in a lot of ways, if you're a broadcaster or a property, you say that if I expose my consumers to your product, that is also an investment because I can take that window and give it to somebody else, or I could sell that advertising time to somebody else for a certain price. How do you guys think about that, and how does that perhaps come into play when you're evaluating opportunities?
Yeah, no, it's critically important. I think I've now mentioned it's 2 MLB teams that I'm working on. My question, probably even back to you, there's 2 huge things. The media rights, obviously, it's part of the valuation. I mean, it's just a ton of source revenue. A lot of questions about, centralizing in MLB, how that might look like. And who wins in that game and who loses. After I'm done, I'll go back to you. But and don't send me a bill for that. But I'd love to have your thoughts, because that is something that people are acutely aware of when they're thinking about MLB, different than NFL, but maybe it looks more like NFL. I'm old enough where the Atlanta Braves, being on television like that was the exposure there, and there's a lot of Atlanta Braves fans all around the country, and I think that was really important to them. So that, and then maybe Stephen, but I'd love to get your take on that.
Yeah, when you're looking at an acquisition of a team, for example, you're looking. What are the first questions you ask? How much are they making? How much does it cost them to run the team? Are they profitable? What is their social media exposure? What is the aggregate social media exposure of their squad? Not just the team pages, and then there's what's the whatever league they're in. What is the aggregate of their Insta, their X, their everything, their Twitter, whatever, across all of their channels, right? That is a key component, and teams are making decisions about squad expansion, not just in terms of the product on the field, but also what they bring commercially. You have so many instances, and take the English Premier League, for example, where coaches, scouting teams have identified a group of players that they want to go after, and the executive office, the commercial teams, the marketing teams come in and say, you're going to pick this guy. You can pick these other guys too, but you're going to pick this guy. Or when it comes time to buy or sell, and by that I mean sell or keep, we're not selling this guy. Why? Because he has 3.8 million viewers and nobody else on your squad does, and people are watching. There are more people tuning in to his YouTube stream, walking through the training facility, joking around with his teammates than are actually watching our games.
Yeah. This is why I love this panel. So raise a hand. How many people have used Uber Eats or DoorDash or any one of those? All right. As a panelist, we'd say 70%, 80%? Okay, all right. So Uber spent a big chunk of money. We're going to go to the NFL. Anybody, Hollywood talent, I wish the CA folks are here, and maybe the UTA. What can Uber Eats do fast, real quick? They know your viewing habit. So with the information they now have, why do you think they want it? Because they're going to package tickets. I see Phil looking at media science there. He's like, you're giving away our secrets. Uber Eats isn't about selling your food. It's about getting the data so that folks like them can go, I know exactly how many people order this when they watch soccer within my market. We pulled the data. I know how many people are watching the NFL or basketball, all that, and I have a natural ticket way. It's about leverage and the ability to monetize the data. Let's talk about that monetization data. And I want to, Steve, I want you to take this because I know there's an entire team of people boiling the ocean at Steve's place, okay? And one of the things that they look at is the data he just mentioned about where it is and where it will be.
Well, I'm going to take this in a slightly different direction, which is the data is crucially important, but if you don't know how to interpret the data, you're screwed. How do you know how to interpret the data? And again, I'm going to stay with what I know, which is European football and motorsport principally. How do you interpret the data? How does your team survive? You survive by generating revenue, right? You survive by growing. You're a zero coupon bond that's going to expand your brand value over time, and you're hopefully going to sell it for 10 times more than you bought it for. And in the meantime, you need to keep the lights on. And you keep the lights on by generating revenue and hopefully generating more revenue than your expenses. Basic mechanics. Where does all that revenue come from? Anybody have a guess? Shout it out. Fans. Fans is the answer. Fans is the answer. Fans buy the merch. Fans buy the tickets. Fans are showing up on social. Fans are the ones who are showing up to the sponsor's hamburger chat because because they sponsor the team. They're the ones going out and buying Hugo Boss suits because they sponsor Tottenham Hotspur. They're buying, it's their legwork, their butt work, can I say ass action in here? It's where they put themselves, where they spend their dollars, where they put their eyeballs. Media rights are driven by fan engagement. Without fans watching on television, there are no media rights. Media rights is a packaged, contractually obligated income stream that is driven by fan engagement. So if you don't understand why your fans care about your team, you are not going to win. And this is the problem that a lot of new owners in this new era of PE coming into sport have, especially in the early days of, if you've ever watched like Sunderland Till I Die or all these shows on Netflix where new owners, many of them Americans, have come in to situations, and I don't begrudge them this. This is not to disparage them. They came into something, and Columbia Connection, Maslow's hammer. They come in and they see what, in their experience, is something akin to the sports they know in the U.S., and they apply some lessons, sometimes too much. They try to squeeze European English football, a deeply, deeply, deeply ingrained English game, into an American framework. And it doesn't work. And they don't understand why. And they're analyzing the data, but they're not analyzing it from a fan experience. When I first got into this business, 2012, my entire soccer exposure was a week and a half of Dave Frommer's soccer camp when I was 7 years old. That was it, okay? Nothing, no idea. Got introduced, was like, hey, we want you to look at this, and we want you to look at Newcastle of all places, right? Mike Ashley was selling Newcastle. He wanted to see, he's like, okay, well, it's going to be $400 million, and we're going to have this, whatever. We had no idea what we were doing. Jumped in the deep end. And so my job, and what we do at Terrapin, is we make sure that there's someone on our team who can step in any investment we make and take over as CEO if we have to, and that fell on me. So I had to learn as much as I could as quickly as I could. I hooked up with some guys on the Miami FC professional second, third, NASL at the time, I think it was, and started learning how to play the game. learning how to kick a football, understanding, like, why do you support the teams you do? It was deep research, and it was years of deep research. Started going to Europe, started going to games, picked a team, got into the fan, got into that fan mindset. If you don't, I'm not saying you have to be a fan to have a successful investment in sports, but you have to have someone on your team who understands what is driving fan behavior. And you can't fully understand what's driving fan behavior unless you have someone who actually feels it in their gut. Because if you go over to England and you see the connections between the teams and their communities, the teams and their social action programs, the teams and everything and the entire ecosystem, if you don't speak to that ecosystem, you are not going to generate the revenue you need to drive sponsorships. The legacy, the community, the history, they are all paramount, and you ignore them at your peril.
I want to go from their ecosystem to Betsy, because we have a unique situation where the WNBA players then stop and play at Unrivaled. And
Yep.
that is ineffectively the season of their professional ability, right? Maybe the season done. There are other places where this happens from a pattern recognition. How do you square that if you're looking at it from an investment standpoint, saying, well, my talent, to Steven's point, the things and the people and what they're doing, the fans are following, and now suddenly no longer on that team, they're now playing this other thing for a while?
I will absolutely answer that question. I should hire you. I'm trying to buy a WSL team in England, and you could be very helpful, Steve. What
Lumley
Chris,
gets 2 points on that. That's
what Chris asked is, he was asking about Unrivaled, which is a new startup league. They'll play their second season starting in January, and women's basketball was a real alternative. It's player-centric and player-led, and it was an alternative for WNBA players to play in their home turf in the off-season. And did very well. 3-on-3 basketball, I think there was a little bit of concern that that players would get injured. It would be a little bit too hard on them kind of going into the season, but it worked out just fine. And what's happening now with the WNBA is they are going through a collective bargaining negotiation, a new collective bargaining agreement, and some of the women that played in Unrivaled and made a good chunk of change in the first season and had a lot of eyeballs watching on television are saying, hey, my league's doing well, I want to be paid more, and there's a lot of tension. There's also tension happening at the NBA, WNBA side of things, because the league has said that they don't want owners in Unrivaled that are also WNBA owners. So you're sort of taking from a dollar standpoint, kind of bifurcating and saying you're either going to go with the new league and put your investment dollars there, or you're going to invest directly in the WNBA. My team actually put in a bid for a WNBA team in Nashville, an expansion team, back in January, and we did not put money into Unrivaled because we were and are continuing to chase this WNBA opportunity. It's hard, right? In a space where you want all boats to rise and you want women's sports to go up and to the right, to have kind of two leagues that are sort of silently a little bit and also publicly a little bit kind of opposed to each other. I think, Chris, with time, it sort of works itself out. I do think that Unrivaled is going to have a great season starting in January. Will the CBA be done? Will there be a lockout on the WNBA side? The important thing is that there's good dialogue. The important thing is that the players are participating and speaking, and the league owners and the team owners are also all actively talking about this. But how it's all going to end, we'll see.
Chris, going back to what Stephen was talking about, it's interesting. You asked him a data question, and he started talking about fans, and fandom is a passion, and so on some level, the data is a manifestation of passion. And sports investment is not purely a numbers and a financial exercise. That is a key component, but sports is a passion sector, right? And so when it comes to these types of transactions, yes, there is more data than ever before, so you have to find the signal and the noise, but you can't discount the fact that these transactions are part art, and by art I mean passion and the negotiation, as well as the science. In particular, using women's sports as an example, there has long been this narrative that like you invest in women's sports because maybe it's the right thing to do, but then the thing in parentheses is maybe the numbers don't bear it out. And from my perspective, trying to tie this all together, the rubber has to meet the road when it comes to the data and the performance, and maybe the passion, whether it's women's sports or any other sport, might be the reason you get that first look. Maybe it's the reason the investor has a slightly longer tolerance on horizon on that ROI, but ultimately it's the combination of these two things that have to come together, and in sports, it's historically been a passion-driven exercise. Maybe that executive likes that sport, has a good relationship with that commissioner, they go out, play around the golf, handshake deal, you're done. Whereas now you need that data to back it up because these are such big enterprises now.
Dan, how do you take that from a compute standpoint? Because you're working on 2 active MLB deals right now, and if there isn't a personal passion project regionally, okay, the numbers don't bear out sometimes, right? Walk me through that, because it's got to be, especially when the minority side is saying, I need more.
So I was just thinking, Betsy mentioned too the collective bargaining agreement. I said, oh boy, I spent a lot of time, when you're thinking about it, the numbers don't add up. The fan, that maybe that is captured in media rights and tickets. And then somebody says, what about a potential work stoppage in Major League Baseball after 2026? And then you're thinking, oh yeah, so the investors, this is Invested Sports panel, is it not? Wow, that's not something, if you're new to this, that is a big deal. You're not used to something like that. That can be catastrophic. And so you almost are educating this new wave of investment of, what they're looking at. There's so many things that are unique to this, the sports side of Invested Sports. They have to educate. That one was very tough to understand, even, that they don't invest in things that have that type of possible catastrophic thing 1 year from now. So those sorts of things are what they need to learn as best they can. I think it's still their passion project along the way. But more and more with this new wave of investors, they're looking at real dollars and cents.
I'm a big believer that the passion is ultimately what's driving the revenue. And that at the end of the day, they're not actually two different things. If you do it right, they can become the same thing. And for example, in women's sports, the numbers not bearing it out, in my opinion, is because we just haven't fine-tuned the model yet. We just haven't fine-tuned the marketing. We haven't fine-tuned the community engagement. We haven't built the infrastructure yet. And that the numbers absolutely will bear out in hockey stick formation. And a lot of people say, oh, women's sports, it's hockey stick, blah, blah. If we do the work and we do it right, then yeah. I mean, why do people watch sports?
Well, it is about passion, and it's the job of everybody on my left to figure out what's that passion actually worth. I asked the question on Arrival for one specific reason. To Stephen's point, in our motorsports business, we actually had a situation this year where we watched a driver, Max Verstappen, create a pseudonym, Franz Hermann, registered himself for a race, and actually go out and race. This is the equivalent of leaving the Lakers and saying, I'm going to play with another team. By the way, I'm in season. Now, his father just happens to be someone that we've known through the years, through different relationships. Max is also trying to tell Red Bull, watch what happens to German GT3 racing when I race. It was 550% increase in practice and awareness. So it's not sometimes just about, hey, I'm going to go do this. I'm going to show you how important it is. And you had to follow him. It wasn't promoted. It wasn't something he did. Just inside the social networks of racing, they said, oh my God, that actually is Max Verstappen. He's going to get in this car. And suddenly what you saw was that fandom was worth something. Now, it's worth a new deal for him. That's what he's trying to get on a Red Bull and against $150 million a year from Mercedes. That plays out to Unrivaled because the numbers that Unrivaled put up were pretty stellar right out of the gate. And by any measurement, a 3-on-3 structure, and if it candidly was a guys' league, it would have been, are you kidding me? Because you're winning your time slot. But it comes at a unique time for the WNBA. Well, look, we could probably talk for hours on this. It's a privilege always to have the ability to do this. I want to thank Dan, Will, Betsy, and Stephen for giving us some time. Let's give a round of applause.